First of all, although I got very few trades today, I personally like unusual days. Yes, I make less money, but I'm always interested in the extremes, and because I can learn from the extremes. And today's behavior was extreme. It was basically a one bar of trading today, and a day that was up 250 points. So I'm always interested in seeing unusual behavior, and I try to learn something from it. Huge gap up today, like 20-point gap up, so the odds are high that today is going to be a trend day. The gap is up and the first bar is up, so the odds favor that the trend day is up as well. The big tail at the top of the bar is not good. In general, on big gap up days, it's always best to look for two-legged pullbacks to buy. And big gap down days, it's always best to look for two-legged rallies to short. Aggressive traders can just go ahead and buy above the first bar, hoping for a trend from the first bar bull. Another tail, more uncertainty. Third bar, bull body, but again a big tail, more uncertainty. A little double top, still a trend from the first bar bull. Bar 4, a bear reversal bar, but the body is small compared to the first 3 bars of the day. So I personally would not, at least I don't think I would short that. It doesn't look strong enough to reverse those 3 bars. So at this point, I'd rather look to buy a two-legged pullback or short a stronger looking sell signal. Okay, another double top, 2-bar double top. Looks like it's going to break out of the top again. This is the first, you could argue it's the first pullback attempt. Bar 4 is a bear bar. So the first pullback attempt in a trend from the open bull is a buy signal. But this channel, these 5 bars have a lot of overlap, prominent tails, not big bull bodies, and 1 bear body. So that's not a strong channel, and chances are the market will pull back. We had the report on bar 7. It went outside down. I think it's risky to trade the report. I think it's risky to short below a bull trend bar on a trend from the first bar bull day. But the channel up from bar 1 is not strong, so it's possible the market could come down. Bar 8, bear close. Possible to short below bar 8. I personally wouldn't do it. The move up from 1 through 6 is 5 bull trend bars, so I think the odds are that the low of the day will hold, and we're just simply testing that low. Bull reversal bar on 9, but to me this is not a strong bull spike, so to me it makes sense to short above it. I think there are going to be sellers above. I doubt that this is going to lead to a profitable long. You need a strong bull trend. You have that with the gap up. You need no obvious climax. I don't think 7 is a strong sell climax, and you need a strong bull spike. And this is not a strong bull spike, as I said. So it doesn't. You need all 3, and you only have 2 of the 3. So I think this is probably going to be a failed high 1. I'm not shorting below 10, a doji bar. I still think the low of the day will probably hold. Okay, we got a couple bars down. Okay, now we got a 2-bar reversal. I said early on that on these big gap days, a lot of times the 2 legs down look crummy. This is a good example, but they still usually work. If you have any question, you can always wait for a breakout pullback. There's the breakout, a few bars up. 2-bar reversal down. There's no way, I wouldn't short this. I think there should be buyers below this 2-bar reversal for the breakout pullback long. Another little bull reversal. This is the setup for the breakout pullback long for what could end up being a trending trading range day. The reason I say trending trading range day is we're in a trading range for over an hour, almost 2 hours. The range is about half of an average range, so the range will probably double. Usually in that circumstance, 2 out of 3 times you'll get a trending trading range day, which means a breakout and then another trading range. So that is the most likely outcome at this point. Bad entry bar, bad follow through on 22. We've got a 4-bar ledge, and 26, 27, 28 are getting higher highs, lows, and closes. So it looks like the market is trying to break out to the upside, which it did on 29. And as the bar was forming, I mentioned that this looked like a strong breakout bar. And when I see a bar like this, when you got a situation where a breakout makes sense, a gap up, 2-legged pullback, bull bar for the first few bars, breakout pullback, and this bar, as it was forming, was pressing on the high tick. You know, the pullbacks were all 1 or 2 ticks. So that's a circumstance when I buy before the bar closes. Because I think it's a strong breakout. If the breakout makes sense, we're looking for a trending trading range day. Upside breakout makes more sense than a downside breakout, and the breakout bar itself didn't have any significant pullbacks as it was forming. So to me, you have to take something long in there. As I said, when I'm trading, I'm thinking a lot about what I'm doing, and so during these breakouts, I'll say something like, "This looks like a good breakout," and what I'm telling you is I'm trying to figure out how to get long, and I don't want to be talking. I want to be trading. So whenever I say this looks like a good breakout, you should assume that I'm figuring out how to get in the market and how to manage a trade. Okay, good follow through on bar 30, or okay follow through. I don't like the tails, but at this point, bar 30 I think is enough to confirm always in is up. I think 29 was strong enough to confirm always in was up. The gap up alone, I think, makes you believe always in is up, and then the bull breakout increases that likelihood. The doji on 31, so you have a big bull body on 30, smaller on 31, and then doji on 32. That's waning momentum, so the market is probably going to correct for a couple legs sideways or down. 29 is a huge bar after a potential final flag and after a big gap up. So it could be an exhaustive type bar requiring a couple of bars sideways to down, and the odds of that increased with 30 with the tail, and even more so with 32 with the doji. Also, we're in the area of a measured move, so I think we should have at least a 2-legged correction here. As far as shorting it goes, to me, always in just went long. So I personally would not short. I certainly wouldn't short below the bar. Shorting the close of 32 and 31 might make sense, but I wouldn't short below it. There should be support at the 7 high, and I don't even know if the market will get there because the breakout bar was so big. Okay, here's a high 1 at 34, 3 down bars plus a doji at the top. That should be a weak high 1, and I gave this as an example of a weak high 1 where I would not short it. Usually for bad high 1s, I short them. I place a limit order at the high of the bar, or if I think it's going to go 2 or 3 ticks higher, I'll place a limit order 1 or 2 ticks higher. But my concern about this was we're starting to get small bars here, and I thought we could go into a tight trading range. And I said that, and if we're in a tight trading range, shorting at the high of bar 34, it may not go down far enough for me to be able to scalp out a profit. And there's also the possibility that the momentum up from 28 was so strong that the market could just keep going up. In other words, that the high 1 could work, although I don't think it will.